All right, everyone. So in this video, I'm going to teach a basic style of tape reading that is for the average person and can be used to read the market. It draws on the work of Wyckoff and others, but predominantly Wyckoff. And because this chart was introduced by him, it's called a tape reading chart. And I think I've also heard of it called the accumulation distribution chart or something like that. All right. So the point of this chart is to identify accumulation or distribution, or basically just demand and supply, and we are reading the market to identify demand and supply. Why? So you can catch a turn. Okay. But before I go any further in teaching this, the first thing to recall is that this is not a magic bullet, all right? And how it should be used is to identify turns at what? At key levels of interest. All right, so what do we mean? We mean market go up, market go down, level of interest. Why? Because it's testing the breakout around here. So we want to see this area. You know, on the test of breakouts. Also, on the test of zones, demand zones, zone. And then on springs and upthrusts, and the hell. And high volume nodes. So this is situation 1, situation 2, situation 3, and situation 4. So, pullback zone. Is the pullback to look to buy pullback here, or pullback to test the breakout? On springs and upthrust, and obviously on high volume nodes, when price goes back, they have a tendency to be attracted to high volume nodes and then bounce. So these are some levels of interest. Test the breakout, pull back to a zone, springs upthrust, and high volume nodes. These are basically it. Okay? You might have others, The other thing is, you also want to, when the market goes to a liquidity level or something like that, it's also, any type of resistance level, liquidity level, or maybe it gets overbought, oversold. So right at the, at these extremes, we want to take a look. All right. So after big move, it's retesting near a high. The market gets overbought or oversold. You could use it at overbought and oversold as well. So you know what your levels of interest are and what you're really good at. So this happens all the time, all right? So this is, I would say this is the 5th scenario. Market gets overbought, oversold. So these are your levels of interest. You have to know them, and the reason is, otherwise you'll be taking trades too many all over the place, because there's a lot of rotations and smaller rotations, and so you have to keep that risk reward in mind. And all right, so levels of interest. So what it all really comes down to is trend and level of interest, or support and resistance. All right. So this always comes first. Trend, support, resistance. Trend, support, resistance. All right. That's the basic context. Trend and support and resistance. All right. So now that I've explained that, level of interests, test of breakouts, pullback to zones, springs up thrust, and two high volume nodes, and obviously overbought, oversold. Okay, so I explained that now. Let's see. Okay, now we're going to learn, what happens by giving you guys an example after example, or just enough for you to get the point across. So you'll see that the market rallies and pulls back. When it pulls back, before it can do this, the demand has to enter. Demand has to be greater than supply for it to turn. Usually that's what you see. All right, so market turned, and then when it comes back to, let's say this is just a level, right? A demand level. You have a lot of demand, a breakout level with high volume. It's coming to it. Now, as the market goes to this level of interest, call it a pullback. We'll just call it a pullback. All right, we want to see demand greater than supply. So, how will this manifest? Well, if we examine the down move, it will continue to go down, 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 until it hits demand. When it hits demand, what do we say? We say supply encounters demand. So supply encounters demand. How can you see this? The key question is, how do you see this? And this is where certain type of charts, in my opinion, what did I do? Yeah. So in this, certain types of charts need to be used to identify this. Otherwise, you're basically going to be looking for wicks. If you're a candle trader, you're going to be looking for wicks or a pattern, something like that, right? So you want to know, is demand in this area coming in? And if so, is supply encountering demand? So a lot of traders over here, they'll look for candle formations or some weird stuff like various combination of I don't know, a lot of different things. Some will go to lower time frame and look for a shift, trend shift, and things like that. There's so many different, exhaustion, climactic, whatever. What I'm going to explain is a clear method to see supply encountering the demand required for demand to push the price higher. All right, so how do we know when supply encounters demand here? And this is where volume shines. This is where volume is used. Because if supply encounters demand, volume is going to come in. All right, so there's two things that you will see. You will see volume come in because they'll start buying. So you'll see high volume prints that have no or little or no follow through. Okay, so as the market goes down in this area, You'll see high volume prints with little or no follow through. That is 1, right? And 2, you will see effort. So as the price goes down, you'll see high volume prints, and it cannot go down anymore. You see high volume prints because demand is buying what is being sold. The high volume print is an indication of demand entering, but only if it has little or no follow through. If it's heavy volume and it continues to go down, that means that demand over there was absorbed and it's going to continue to break through. So this condition has to hold true. Where you have high volume prints with little or no follow through, or you have a lot of effort, which is basically a lot of volume but less range. Increase in volume, but no increase in the price ability to go down, no increase in range. These are the two things that you're going to see. Situation 1, situation 2, case 1, case 2. Again, on the pullback, you're looking for high volume prints with little or no follow through, and then another thing that may happen is effort, high volume, or increasing in volume, but the spread, the range is not increasing because someone is buying the other side. Someone's taking the other side and buying. All right? In both cases, you must have a ease of movement, which is a reversal. Ease of movement or reversal. So if you have high volume prints, you have a lot of effort, you still need that reversal after it, meaning the price here would need to go up. If you have high volume prints or you have a lot of effort, you can say only that supply is encountering demand, right? You cannot make the judgment that it's automatically going to reverse. Why? Because when supply encounters demand, you can have at least two major situations. One, it absorbs demand and continues lower. All right, so this is the continuation situation. If supply encounters demand, it absorbs it and continues lower and breaks through. The other is there's a lot of effort and there is a reversal. So two things. Either you absorb and continue down, or there's a lot of effort, you can't move it lower and reverse to the upside. Okay? So this is the two situations, absorb or reverse. Absorb or effort, and this is what you need to know. All right? So this is probably one of the easiest ways to do this, using a chart reading, tape reading, but it's chart reading but with tape reading principles. And for this, we use a special type of chart, which is this type of chart. Now, you can use other types of chart as well, so long as they have price with volume prints. So you need to see volume prints. No volume prints, no good. You need to see price with volume prints. Whatever chart you want to use. Alright? Because you're reading, this is tape reading. Price, volume added, volume added, volume added. Here, big volume. Okay, now this is going to tell you that absorbing this area is going to bust right through. All right. All right. So let's look at this and start reading. Actually, let's use the ES. Everyone who likes the ES. All right. So we're using the ES, and we're going to read this situation. All right. Assuming we're looking for a reversal, price is going up. Price is going up, it's going up, it's going up, and all of a sudden, we see the volume increases and the range decreases. This was the second scenario. The first scenario were high volume prints. So we see the high volume prints with little or no follow through. Right here, no follow through. See the print? Is there any follow through? No. That's a problem. Why? Because it's supply. Why? Because they don't follow through. Why? Because supply is always at the top, demand is always at the bottom. So here's the effort and no result. Here's the high volume print. What can we say? We can only pass the first judgment that demand has encountered supply, but we have to ask, which scenario is going to occur? Is it going to absorb supply and go and continue higher, or is it going to reverse? In this situation, you see a red bar going down, taking out the low of the prior column. So that is the reversal. That's the reversal after the high volume supply print and the effort. Taking price lower. Okay? Right there's the high volume print. Right there's the increase in why is it in printing? Oh shit. Okay. I don't know. All right, let's give it a second or 5. All right. All right, so that's what happened. Now we want to buy a pullback, so it's rallied and you have the reversal. Now it's coming back down. Now what are you going to look for? It's one or two things. High volume prints at the lows with little or no follow through, and effort. One or both, followed by a reversal piece of movement. Okay? So go down. You see this is at the low, right? But there's ease of movement to the downside. We're looking for, we're looking for demand. So maybe there's some demand, but this is going down. This, no, here. Here, we have the volume at the middle, but it's near the low, right? We have a high volume print with only one box down, so it's little or no follow through, check. And we also have the other scenario where you have a lot of volume, but not a lot of movement, effort. So we have effort plus the high volume print. This is telling you demand is entering. Demand is entering. And then you'll catch the reversal on the way up and see if you can get it retest. So that's what happens. Boom. All right. Actually, it even happened up here. You had this little increase and no reward and all of that. But anyway, now let's say you want to buy a pullback, right? Because you want to buy a pullback. So this is the area. Price go down, down, down. What do you notice? Bingo. High volume prints, demand coming from a test of of a breakout or demand area, whatever, right? So what are the two things? First, high volume prints. Is it near the low with little or zero follow through? Yes. Right here. Is the volume increasing? Yes. Is there a reward? Actually, there is reward, but so that second situation of F reward is not really there, but the high volume print situation is there. What do we do then? We make the judgment that supply is encountering demand, right? But will it break through or will it reverse? And this is where we need to see ease of movement. Is there ease of movement? Yes. Where? Here. Bang. Right here. That's the ease of movement. That's telling you that supply encountered demand and demand overcame supply by making a high, a reversal, with volume and range, ease of movement. And the same thing happens over and over again. Even up here. See how the high volume print at the top, volume increased, range didn't, ease of movement downside, going down. Okay, so I've explained the basics. Actually, I've explained it. It's this is one way of tape reading. Probably the simplest that you'll encounter ever. The first thing to note is obviously the trend. The second thing to note is your level of interest. The third thing to note is what happens there at your level of interest. The fourth thing is there effort? Is there high volume prints with little or no follow through? If so, we've encountered, in this case, demand. If it was upside down, we've encountered supply, and then ease of movement to the upside, creating the reversal. Okay. Besides that, you should also take a look at time of day, because that matters also. Time of day is very important. If the market opens, there's a lot of volume all the time. It's a mess. I'm going to give one more example. It's a real example of how I knew that we had hit the low. And this was on Michigan Sentiment. I think it was Friday or Thursday. I don't remember. But basically, the market went down. And went down, and if you go online anywhere, everybody's shorting, right? Especially Michigan Sentiment, the price is moving, so on and so forth. Price is moving, it looks very bearish, and it looks like it's going to break through. So what had happened was, this was a support level. It looked like it was going to break right through. And it was breaking right through. But I'm looking at this, and I say to myself, what is that? That print is the highest print since the top. Volume is increasing, but price has totally shut down. Totally shut down. I mean, that one print has more volume than like 3 prints, and this column had more volume, but it's less than half the size. So this, when everybody was selling, buyers were accumulating, strong hands accumulated, 24,000 contracts here, and that's it. That's what happened. And then you had ease of movement right here, creating this reversal and this move up. This move up. This was Michigan Sentiment. This is the print right there, showing you a slight increase in effort, but a very significant decrease in reward or result. Very significant decrease. And that's what happened. All right. All right. So what's the next steps for y'all? Like, you just get a price and volume chart with the, volume and price similar to this. You just show volume and you read it, and just practice and take screenshots, stuff like that. And the idea, but do not try new charts if you already have a chart with volume and price. All right, that's all, folks. Take care. Bye.